Hello, today we're going to be making a quick video here about Cardinal Health. We're going to take a look here at their free cash flow. As you can see here from the years, if we come from 2014 to 275, except for, to 2017, a little low end on 2020, but except for those years, it's been pretty consistent. As you can see here, we come to 2023, 2370, and this is in millions, by the way, so that's 2 billion in annual free cash flow. If we come over here to their assets and liabilities, let's just take a look at their assets. 43710 billion. It's an increase. Long-term debt is sitting at 3 billion. Total liabilities is sitting at 47 billion. That's increased by 4.5%. Cash on hand 3 billion, 10% increase. Okay, so if we come over to revenue, you can take a look at their revenue. It did recently, over the last 12 months, increase by 12%. If you come down here and look at 2014, it was at 91, and now in 2023, it's all the way at 205. So that's a big increase from those years. That's pretty good. Their net income, it declined by 114% over the last 12 months. So if you come over to their net income, you can see it here for the quarterly basis, and here's your yearly basis. There's some bad years. There's a lot of net income years though. If you come over here to their financials, this will where you see a lot of things like their basic EPS 1.00. But if you look all these other years, look 0.98, 3.42, 3.66. So they used to be really good at this, but look, they've had some bad years like 2020, 2022. So you're really gonna want to go into depth and find out why this was. Why were they spending that money? Dive in deeper. But as you can see, their outstanding shares though. It's been declining every year, so that gives some value to stockholders too. So that's a pretty good thing. You can always take a look at their margins, like their profit margins. It's not listed here, but you can see it on the graph. And then gross margin, operating margin, all these things too. You can get all this from this website, which is Macro Trends, for free. But we're going to go ahead and take a look at that free cash flow we were showing you earlier and come up with a quick calculation to see what Cardinal Health may be worth, since they are, free cash flow positive and very consistent with it. So we came over here and we enter in their numbers. We using a growth rate of 5% to be conservative because that's a low end estimation. 10% discount rate, 2% perpetuity, outstanding shares 250. We come to a discounted cash flow price of $135.42. Now, if they were growing like similar to what they were doing with the 12%, you can see how these numbers change. And the discounted cash flow price is 225, so they would be severely undervalued. But even at current prices with the 5% growth rate, we could say potentially that Cardinal Health is undervalued. Based upon this calculation right here, it's already trading at like a 20% discount right now as we're speaking. So that's something to keep in mind when you're considering Cardinal Health. Do your own calculations, do your own research, dive into the company, and let's find out if they're potentially undervalued. I am currently not purchasing them. I'm just looking into them because someone mentioned it to me today in the Discord and Our Stock Trades. And, I just thought I'd do a quick calculation and look into the business a little bit and come up with the discounted cash flow price, and then maybe dive behind the scenes and see if it's something that I want to invest into, or maybe it's a swing trade. But thank you, and I hope you guys have a nice day.